Welcome to this explainer on the foundations of day trading. Have you ever wondered how people actually make money buying and selling stocks, crypto, or gold in just minutes? It's wild, right? If you've been curious about the real mechanics behind this incredibly fast-paced world, well, you're exactly where you need to be. Today, we're cutting through the noise and taking an honest, hype-free look at how the financial markets really operate for short-term traders.
But before we get into the nuts and bolts, we absolutely have to address the elephant in the room. It's the #1 question beginners have. Is day trading actually a legitimate way to build wealth, or is it literally just gambling? Like, are people out there just rolling the dice on screens flashing red and green numbers? Today, we're going to demystify this whole thing and show you exactly what separates the pros from the people just playing the slots. Here's our roadmap for today's explainer. First, what is day trading? Then we'll cover the financial markets, the tools of the trade, the actual mechanics of profit, and finally, the biggest beginner mistakes you absolutely need to avoid.
All right, let's jump right into Section 1. What exactly is day trading?
The definition is honestly incredibly straightforward. Day trading simply means you're opening and closing a trade within the exact same trading day. That's it. At its core, it means you are never holding an asset overnight. The second your head hits the pillow, your account is totally flat. You have no active trades. And look, while a gambler relies purely on luck, professional day traders are using concrete strategies, rigorous risk management, and intense discipline to execute these rapid-fire trades.
And this really highlights the big difference between day trading and traditional investing. Long-term investors are looking at horizons spanning months, years, or even decades, right? They're buying a piece of a company and just holding on for the long haul. Day traders? Totally different story. We're capitalizing on tiny price movements over a span of minutes or maybe a few hours at most. A day trader doesn't care where a stock is going to be in 5 years. They only care about where it's going to be in the next 30 minutes.
Now that we've nailed down the definition, let's move right into Section 2, the financial markets.
What's truly fascinating here is the sheer variety of options you have, really depending on your own schedule and risk tolerance. We've mapped out the 4 primary arenas for you. First up is Forex. This is the absolute giant of the financial world, trading trillions of dollars every single day. We're talking global currencies, like the euro against the US dollar. It's got massive liquidity, really low trading costs, and it runs 24 hours a day during the work week. Next up is gold. Usually traded against the US dollar, gold is super popular because it tends to move aggressively whenever major economic news hits. Then, you have your traditional stocks, owning slices of companies like Apple, Tesla, or Nvidia. Now, this market is tied to official exchange hours, so there's a strict opening and closing bell. And finally, crypto. Bitcoin, Ethereum, the whole shebang. This market literally never sleeps. It's open 24/7. But a quick heads up, crypto is wildly volatile. Those massive price swings create huge opportunities for sure, but they also bring significantly larger risks.
All right, moving into Section 3, tools of the trade. Let's look at what you actually need to pull this off.
You know, a lot of people assume you need an insane amount of startup capital or some underground bunker filled with glowing monitors. But the barrier to entry is actually surprisingly low. You really just need a computer, or honestly even a smartphone, a rock-solid internet connection, and a trusted broker. For the software side, you'll need a trading platform. Industry standards are usually MetaTrader 5 or TradingView. But I want to draw your attention to the last 2 points on this list because they're an absolute game changer: a demo account and knowledge.
So here is the absolute golden rule. Never start with real money. Seriously, I cannot stress this enough. Before you risk a single dime of your hard-earned cash, you have to practice. The pros spend weeks, sometimes months, grinding on demo accounts. These accounts use fake, simulated money, but they operate in real, live market conditions. Taking the time to learn the ropes without putting your own capital on the line is going to save you a massive amount of money and stress in the long run.
Okay, let's assume you've got that demo account all set up. Let's move to Section 4, the mechanics of profit.
Let's see how this actually plays out in a classic rising market scenario. The absolute simplest, most traditional method is just buying low and selling high. Let's use gold as an example. Say you analyze the market and you're confident the price of gold is about to go up. So you buy in at $3,350. The market does what you thought, moving in your favor, and the price ticks up to $3,355. You sell your position, closing out the trade. That $5 difference in price, multiplied by the specific lot size of your trade, becomes your profit. It's clean, it makes total sense, and it's exactly what most folks picture when they hear the word trading.
But wait, what if the market is crashing? Well, thanks to a brilliant little mechanism called short selling, you can actually make money in falling markets too. It basically just reverses the traditional order. First, you predict a drop, so you sell an asset while it's high. Then, the market tanks, just like you predicted. Finally, you buy it back later at that new rock-bottom price to close the trade. The difference? That's your profit. This ability to go long or short is exactly why day traders can find amazing opportunities regardless of whether the broader global economy is booming or completely busting.
With those mechanics in our back pocket, we arrive at Section 5, Biggest Beginner Mistakes. Why do so many new traders end up losing money?
Look, studies suggest that nearly 90% of beginners fail, and the crazy part is, they almost all fall into the exact same traps. Mistake number 1, trading without any real education. Guys, watching a single 30-second TikTok is not enough to master this. It requires actual, serious study. Mistake number 2 is risking way too much. The pros usually only risk a tiny, strictly calculated percentage of their account on any given trade. Mistake 3 is a nasty psychological trap called revenge trading. This happens when you take a loss, get frustrated or panicked, and immediately throw open another impulsive trade just trying to win it back. Spoiler alert, you almost always just lose more. Mistake 4 is trading purely on emotion instead of sticking to a concrete plan. A plan that tells you exactly where your entry is, where to take profit, and where to place a stop loss to cap your risk. And finally, mistake 5, expecting to get rich quick.
You have got to completely erase that get-rich-quick mentality from your brain right now. Trading is a highly skilled profession. Think about it like this. Would you ever expect to be a competent doctor, a structural engineer, or fly a commercial jet after a weekend of binging YouTube videos? Of course not, right? Mastering the financial markets requires that exact same level of serious time, intense dedication, and deep respect for the craft. Now, what we've covered today is really just the bedrock. Nailing these foundations is going to pave the way for the advanced skills you'll need to tackle next. As you keep diving into your education, you're going to master how to actually read those price charts, how to spot specific candlestick patterns, how to juggle multiple time frames at once, and how to map out those crucial structural zones of support and resistance. And you'll do all of this before you even place your very first step-by-step trade.
Which brings us to our final and maybe most important takeaway. Successful traders don't focus on making money first, they focus on learning. The money? That only comes after the learning is done. So, as you look at stepping into this incredibly fascinating, fast-paced world, I want to leave you with this to ponder. Are you really willing to put in the time to become a professional, or are you just looking for a casino? Thank you so much for joining us for this explainer. Keep learning, stay curious, and we'll see you next time.